October 17, 2016. A single blinking cursor on a darkened screen, somewhere in the sprawling concrete labyrinth of a major financial district. Across continents, synchronized breaths are held. They believed the system was impenetrable. The paper trail dissolved into the brine of offshore currents. But that night, a whisper of code threatened to unravel $1 trillion of carefully constructed silence. How much of the world's wealth is truly invisible, hidden in plain sight behind layers of shell companies and legal fiction? The answer is staggering, but the real shock isn't the number. It's the deliberate, decades-long architecture designed not just to hide money, but to rewrite the rules of global accountability. The first tremor wasn't a headline, it was the low hum of a server farm overheating, an electronic groan beneath the manicured lawns of the privileged. Imagine a vault, not of steel but of jurisprudence, stretching from the palm-fringed quays of the Caribbean to the anonymous office blocks of the City of London. This vault didn't just hold yachts and diamonds, it held influence, the leverage that shapes governments and dictates policy. The person guarding the entrance, let's call them the architect, wasn't a criminal in the traditional sense. They were a master facilitator, someone fluent in the arcane dialects of trust law and international finance. They understood that the biggest fortunes don't need to break the law, they just need to exploit the gaps where one nation's law ends and another's has yet to begin. The architect's tool wasn't a crowbar, it was a perfectly crafted document signed on a Tuesday afternoon in a jurisdiction where no one asks too many questions. To understand the scale of the trillion, you have to go back further, before the blinking cursor, before the frantic late-night calls. We rewind to the late 1970s, a moment when globalization was accelerating, but regulations hadn't caught up. The air was thick with deregulation fever. Think of the birth of the modern limited liability company, a legal entity so flexible it could be a phantom. A ledger sheet in Delaware could claim ownership of an asset registered in the Cayman Islands, managed by a trustee in Liechtenstein, while the actual beneficiary lived quietly in Geneva. Each step was perfectly legitimate, a series of interlocking gears designed to spin so fast that any investigator attempting to follow the money would exhaust themselves long before reaching the source. They didn't build one wall, they built a maze where every corner looked identical and the map was proprietary. Consider the structure. It always starts with separation. A wealthy individual, let's trace the shadow of the first major deposit, establishes a series of trusts, not for inheritance, not for charity, but for obscurity. These aren't paper bags stuffed with cash. These are digital empires built on bearer shares, securities owned by whoever physically holds the certificate. In the pre-digital age, this was physical paper, easily transferable, untraceable. The moment that share changes hands, the public record evaporates. Who benefited? Who signed the directive? The answer is held only by the trustee, the person paid handsomely to forget. The escalation wasn't sudden, it was incremental, normalized by success. Every time a major financial crisis hit, instead of tightening oversight, the wealthy found a new, more creative avenue of escape. And any changes I was not served around 50 corner, assistance shapes loses united. After the 2008 collapse, the pressure to appear transparent intensified. This pressure ironically created the greatest boom in tax haven utilization. Why? Because the scrutiny forced the architect to become smarter, to upgrade the infrastructure. They moved beyond simple shell corporations and started utilizing complex financial derivatives, legal instruments so convoluted they require PhDs just to articulate what they own. It's the difference between hiding jewelry in a sock drawer and building a decoy mansion with hidden rooms accessible only by biometric scan. The complexity became the defense mechanism. Now let's zoom in on a single transaction within that trillion-dollar shadow economy. Picture a mining conglomerate headquartered in London, reporting respectable, modest profits year after year. But that conglomerate owns a subsidiary, let's call it Apex Holdings, registered in the British Virgin Islands. Apex Holdings doesn't mine anything. It exists purely to license intellectual property, a patent, a trademark, a brand name, back to the London parent company for an astronomical tax-deductible fee. The London company pays millions in royalties to Apex, instantly shrinking its taxable profit at home. Where does that money land? In the BVI, where the corporate tax rate is zero. The money hasn't been smuggled. It has been routed through a perfectly legal accounting maneuver, making the profit disappear on one balance sheet and reappear offshore waiting patiently. The audacity lies in the collective agreement, or rather the collective inaction. Governments, particularly those that benefit from hosting these financial centers, look the other way. Offshore banking isn't just a haven for the ultra-rich evading taxes. It's a massive, complex industry that employs lawyers, accountants, and wealth managers in legitimate economies. They are the gatekeepers, the respectable faces of the shadow system. When a politician speaks about cracking down, the whisper in the room is about jobs, about instability in the global capital markets. The system protects itself because too many powerful entities have a vested interest in its continuation. The silence isn't accidental, it's transactional. This brings us back to that blinking cursor on October 17th. The architect wasn't working alone. The data breach, the leak, was the culmination of years of careful, dangerous intelligence gathering by those who believed the imbalance was unsustainable. They weren't interested in individuals, they were interested in the mechanism itself. The data they secured wasn't just bank statements, it was the operational manual for hiding wealth. It contained the names of the nominee directors, the specific clauses in the trust deeds, the coded instructions on how to shift assets instantaneously across jurisdictions at the first sign of trouble. It revealed the interconnectedness, how the same law firm structured trusts for energy magnates and tech billionaires simultaneously. The central question, the one that keeps the global financial elite awake, is this: if the structure can be exposed, can it be dismantled? The $1 trillion isn't just sitting idle, it's actively working. It's invested in real estate, in emerging market bonds, in venture capital that shapes the future technologies we use every day. It provides political insulation. Exposure doesn't instantly claw back the money, it exposes the vulnerabilities in the entire global framework that allows such concentrations of untaxed capital to exist. The leak showed that nearly every major commercial bank on Earth played a role in facilitating these transfers, acting as the high-speed pipelines for the hidden cash flow. They were the highways, not just the roadside motels. The ultimate realization is that the tax haven isn't a place, it's a mindset, enforced by legislation written by the very people who benefit. It's the understanding that if you have enough money, the rules that govern everyone else become merely suggestions. The trillion isn't a static number locked away. It's a dynamic force, constantly shifting, constantly demanding new layers of complexity to shield it from accountability. And as the first reports from that leaked cash began to trickle out, confirming the worst fears about the scale of global evasion, the immediate response from the shielded minority wasn't panic, but calculation. They weren't worried about being caught. They were already planning the next iteration of the maze, anticipating the next hole the light might shine through. The blinking cursor froze, but the system, resilient and deeply embedded, merely paused to recalculate its next move.